Right now, Atanu Mukherjee, President Dastur and Company, joining in on the show. Atanu, hi, good morning. Good to have you on the show. This has really been the fastest recovery in the commodity prices from an economic crisis. Manufacturing capacity utilizations, as we understand, are almost back to pre-COVID levels, which has really helped the industrial metal prices as well rebound. What, according to you, has aided it, and what's been different this time around?
Well, so I think you're absolutely right that the commodity prices and the commodity demand has smartly rallied over the past few months. And I think this primarily due to two factors. One is a factor that's got to do with the stimulus around the world. Significant stimulus, right, close to about 12 to 15% of the global GDP, about 12 to $15 trillion, probably going to be supported. That's a big driver. And I think the more important driver right now is China. China has been a significant driver of demand post-COVID, especially as it got out early in terms of the COVID pandemic. And the steel demand, for example, has just kind of like gone through very high places, and it continues to hold its own as you go forward. And correspondingly, if you look at all the commodities which support steel, has also been rallying significantly in terms of support over the past few months. So I think the two fundamental drivers of this turnaround, if you will, one is of course the stimulus effect, which is having a lagged effect in terms of demand in location, and the second has got to do essentially with the Chinese effect in terms of really demand recovery. So I think those two essentially kind of explain what's happening out in the commodity markets.
Atanu, hi there. Morning. You know, with the kind of spectacular moves and rally that we've seen in metals, crude, and the prices that they're currently quoting at, do you think that economic normalcy has already been written in, or do you think that the vaccine approvals and, more economic stability could further boost prices?
Yes, I think there are two factors playing it out here, right? One is that we're in a trajectory to economic normalcy. That's certainly for sure, although it's certainly not to the level where it should be before pre-COVID levels. So I think there's still room to grow in terms of economic stability. We still don't know what the effects of some of the global events in terms of pandemic coming back in the United States and Europe might have. But at the same time, we have this whole wonderful situation of vaccines coming in from Pfizer and Moderna, which certainly have a big impact going into the future in terms of the revival of the economy. So I think as the vaccine comes in and plays out in terms of its efficacy and implementation over the next 1 year, we'll see continued normalcy reigning in around the world. And I think that will certainly support much more demand evolution of the commodity markets, which supports the basic commodities for consumers like automobiles and white goods, and then eventually I think construction. And I think also simultaneously, if you look at the stimulus that's been given and being formulated to make sure that the pace of recovery doesn't tame down, you will see that the United States, the Janet Yellen coming in, is probably going to put in a fair amount of stimulus package along with Jay Powell. So that bodes good. The recent, what I call investments, the recent infrastructure kind of led announcements, if you will, from a perspective of support from the Indian government might be very helpful in terms of driving the commodity sector further. So I think a combination of these things together with the vaccine certainly helps in restoring normalcy on a stable basis as we go forward, and probably is going to accelerate the V-shaped recovery in the commodity markets, right? Although I must say that the crude markets are certainly a little far out in terms of their normalcy coming back in, but it should be a while before crude comes back to normal. But other commodities certainly are looking to be on the right trajectory in terms of establishing the normal trends.
Okay. Atanu, the peculiarity of this crisis was in the disruption that we saw in supply chains as well as in production. Do you think that we're in the same supply, but you're seeing a higher demand dynamic now for the world's leading industrial metals like aluminium as well as for copper?
Yeah, certainly it depends on the commodity type, but I think that the basic impact of COVID, as you all know, has got to do with the supply disruption primarily, which led to the demand destruction, right? And as the demand comes back with the stimulus and obviously the vaccines and other effects, the demand side grows, but the supply side takes a little time to restore itself in terms of obviously the operations and also the supply chains. So, for example, if you look at copper markets, certainly there's been a lag in terms of the restoration of supply, and so if that happens, the prices go up, and the spicy copper prices also near $7,200, $7,300 per ton, which is probably about a 30-month high. Similarly, if you look at steel globally, you will see that the supply disruptions in Vale, for example, has obviously not helped in terms of iron ore prices. And iron ore prices are kind of like on a record, probably 4 or 5 years high at about $120, $130. So I think on the supply side, certainly the restoration has been a little more lagged, but the demand side has been moving faster. And so that's why you see a price escalation in terms of the prices to the end consumers or the end consuming industries. So I think that's what is probably going on. But eventually, supply will restore itself. And I think you will see more normalcy. At the same time, obviously, there are some imposed supply disruptions because of tariffs, for example, which is an impact on the pricing. And so if you look at the tariffs on Australia by China and the coking coal, so coking coal markets have kind of like have readjusted themselves in terms of the supply dynamics. So all this playing together essentially is driving the price higher, and as supply catches up over time, I think you'll see normalcy in terms of price and stability in terms of commodity prices going forward.
Okay. What about inventory? What's the kind of build-up or drawdown you've seen, Atanu, during this time?
So I think there's a significant drawdown of inventories, right? If you look at the steel markets, for example, certainly the inventories have gone down significantly what it was 3 or 4 months back. 4 or 5 months back, India, for example, steel capacity utilization about 50%, right? And so there's significant inventory building up that's been drawn down with the demand escalating. If you look at copper markets, for example, it's in the negative territory at this point of time. There's a significant demand-supply delta at this point of time, and that's probably going to grow further as electric vehicles and other such renewable electricity-based goods come into market. So I think there's been a drawdown, and I think that'll continue to do so over a period of time. Aluminum is a little soft, but I think that as aluminum also further stabilizes, we will have a more balanced inventory out there. And as you know, aluminum is a more continuous process, so obviously the ability to shut off aluminum is a little more difficult, and that's why the inventory in aluminum has been a little higher compared to other commodities. But in general, I think that there's been an inventory drawdown in significant scale. Production has resumed across all the different commodity sectors. Mostly except for crude, at normal levels, exceeding normal levels at times, in the bigger plants, probably at 90% or so. And so I think, that's very salubrious, for example, for the industry per se.
All right, Atanu, we'll leave it there. Thanks so much for joining us today. Always great catching up with you and understanding some of the current metrics at play. All right, we're going to take a very quick break. We'll come back with some Chartbusters. Do stay tuned.